Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, August 14th, 2017. Do you know what today is? For me, today is one of those days where I sit there and I watch CNBC or any of the mainstream financial channels, and I'm in utter and total disbelief. Why am I in total and utter disbelief? Well, as I'm doing this video blog, the stock market is still open. It's up about 140 points. Now, you would imagine, yet again, that we got really good economic news today. Or some event happened that, would spark the market to react in a positive way. Well, what's pulling the market higher right now is kind of interesting. Now, I don't know how many of you out here watch the overnight markets and the futures. Well, last night we got some abysmal news out of China. They are in an economic slowdown, and all of a sudden the futures just rocket higher. Why would that happen? We get the world's second largest economy spewing out all kinds of bad economic news, confirming that they're in an economic slowdown, but the markets are rallying. The pre-markets are rallying, and they're rallying today here in the United States. Well, if you were to listen to the mainstream financial channels, CNBC specifically, you're going to hear this. Oh, this is a relief rally. A relief from what? They want you to believe that the whole issue with North Korea has been resolved. Maybe we're all friends now or something. This is not a relief rally whatsoever. Freaking ever. What this rally is being driven on, and I wrote an article about this today on Steemit, is because now the world's second largest economy is slowing down. This means that world central banks are going to have to continue to stimulate and print and add cash to a digital screen, and the Federal Reserve specifically, this is what's driving the market today, people, is out of the way. Gone. Now, I have been saying that the Fed is going to raise rates one more time this year, and it's going to be a token rate hike, 25 basis points, probably in September here. With regard to the federal funds rate, they kind of have to do this because they're stuck. They don't want to, but they're going to have to. Now, this falls right back on what I have been saying since the Fed opened their mouth with regard to their balance sheet. The market is rallying today because it knows the Fed cannot touch its abnormal balance sheet. And I've been saying this, you know this. If you follow this blog, you've heard me say the Fed's not going to do anything with their balance sheet. So, today's market rally here is on the back of bad economic news coming out of China, meaning the Federal Reserve is out of the way. Out of the way. You know, what else is going on here? Retail stores are closing all over the place. Restaurants are closing all over the place. Wages are going nowhere here in the United States. Money velocity is at historic lows, near historic lows. The U.S. consumer is hurting here. But again, it doesn't matter to the stock market at this point because it's completely irrational. And black is white and white is black. If we would have gotten good economic news out of China last night, the market would be down a couple of hundred points, referring to the Dow Jones Industrial Average. Again, the bad economic news means the Fed is out of the way for as far as the eye can see. Now, let's look at a couple more aspects of this market here to show that there's trouble lurking underneath it. And you can just see it in real time. How do you see this in real time? If you follow this blog, you know exactly what I'm going to say. You're going to look at the bond market, more specifically the U.S. 10-year yield. As I am doing this, the U.S. 10-year yield is hovering at about 2.2. I think it's 2.21 exactly, but you get my drift here. So what is this telling us? There's still the safety play going on here with cash making its way into the perceived nonsensical safety of bonds. And the U.S. dollar is not doing anything. Again, it's just about at the flat line. So today's relief rally is no such thing No such animal whatsoever as a relief rally, because again, turn it on yourself if you don't believe me. Go turn on CNBC, and they're going to try to tell you this is North Korea. All of a sudden, we're all friends now. We're going to hug and kiss, and what else we're going to do in the back? But seriously, this is what they want you to believe. This has nothing to do with it. This is a market that is frankly, it's a comedy act or a nightmare. However you want to look at it, being run by world central banks with no end in sight. And how many of you out here have heard me tell you that these distortions are going to get monumentally worse? Well, that's what's going to happen here on the back of the debt bubble, which is going to continue to inflate and inflate and inflate. That's it. There's no free market here anymore, people. All right, let's talk about a few other things that are important because there's opportunity here. Markets. I did take up a new position on Qualcomm today. Calls, believe it or not. Check out my website specifically. I am still short XRT, which is the retail ETF. We're going to get a lot of information this week coming with regard to retail sales. Now, be careful on that trade there. Watch it very closely. It wouldn't be a bad idea to take up a small little hedge there just in case. You always got to be ready. You always have to be ready. Don't just sit there and believe your trades are going to do great just because you feel like retail sales are going to go down. I feel like retail is going to remain under pressure here. But in this market where black is white and white is black and nothing makes sense anymore, who knows? So it may not be a bad idea for you to do that. One more thing before I let you go, and this is important. On Saturday, I put out an article and I posted on my social websites that I was going to start opening myself up to some one-on-one like consultation talk with regard to the markets and trading. Well, I am booked solid for the next 2 weeks already. So, and I can't even keep up with my email. So if I don't get back to you right away, I will. I promise. Give me a minute. I had no idea that I was going to get this kind of response. I'll be honest with you. So if you're still interested in this, send me your email. I will get back to you, and we will book you at one particular time. But again, until at least the first. It's probably going to be later than that when I finish today. I have no time slots open. I am absolutely booked and absolutely busy. I may actually have to stop doing this if I can't cope. I mean, it's just too much. I'm a busy guy, as you know here. But for now, I'll keep it going. I wouldn't be surprised if I start running a month behind. Anyway, with that said, I'm going to let you all go. But again, keep your eye on this market. This is in no way, shape, or form a relief rally. This is only on the back of the Federal Reserve that is now absolutely pushed out of the way. I still believe we're going to get one more hike this year. A token hike, probably in September, but the Fed's balance sheet is going to remain untouched. I can't imagine a scenario where they're going to start normalizing, this is their words, their abnormal balance sheet. All right, with that said, see you tomorrow.